Assalamualaikum and hi everyone. We are from Group 4 and we are going to present on Goodwill, Cash Generating Unit and Operating Segment. My name is Munira Rawai binti Mohta with metric number of 195993 and I'm going to be the first presenter. Moving on to the next slide is the learning outcomes of this chapter. We are obliged to know on the Goodwill, Cash Generating Unit and Operating Segment, the impairment test for Goodwill under the CGU concept, the principle of operating segment, and the disclosure of operating segment in group presentation. So, what is cash generating unit? In MFRS 136 of impairment of assets, CGU can be defined as the smallest identifiable group of assets that generate cash inflow that are largely independent of the cash inflows from other assets or group of assets. To have a better understanding of what is CGU, we may look at the example. So goodwill is an example of asset that cannot generate its own cash flow. So as we all know, we need cash flow to calculate the recoverable amount, particularly the value in use of the asset. Therefore, we need to combine the goodwill with other assets such as fixed asset, intangible asset, net working capital such as inventories, corporate assets such as head office. So this combination of asset will form a CGU and as per definition, is a group of assets that generate cash inflow and then only we can test for the goodwill impairment. Before we go any further, we need to identify why CGU is very important. So the CGU concept is used by the International Financial Reporting Standard and it is associated with the concept of the assets impairment. So without the CGU concept, it will be very difficult for an organization to determine the cash flows associated with individual assets for an impairment analysis. Now I'm going to pass the floor to the next presenter, Wan Noriza.
Assalamualaikum and hi, my name is Isa, metric number 197341, and I will be explaining on the part of allocating the goodwill to cash generating units or CGUs, as well as the impairment testing for goodwill. So before we move to the main focus of testing the impairment, let me first explain the impairment in relation to goodwill in a business combination. So in a business combination, when one entity acquires another one, goodwill often arises, and for the purpose of impairment testing, the goodwill shall be allocated to each of the acquirer's cash generating units or group of them. So each unit or group of the units to which the goodwill shall be allocated represent the lowest level within the entity at which the goodwill is monitored for the purpose of internal management, but it is not larger than a reportable segment. However, if the initial allocation of goodwill acquired in a business combination cannot be completed before the financial year end or before the end of the annual period, therefore it should be completed before the end of the first annual period beginning after the acquisition date. For example, the current year end for the company A is on 31st December 2020 and the new subsidiary is acquired on 31st October 2020. However, the new allocation of goodwill is not completed before the end of the financial period, which is on 31st of December 2020. So therefore, the company needs to complete the allocation by 31st December 2021, which is the first annual period after the acquisition date. So on a side note, the level of the CGUs to which the goodwill shall be allocated depends on the decision of the management in relation to how they want to monitor the goodwill for the purpose of internal management. For example, they may want to monitor the goodwill by plan basis, by division basis, by individual company basis, or by the location basis. So now let's discuss in details on how to test the impairment for goodwill with CGU. So the MFRS 136 paragraph 90 prescribes how to perform testing of CGU with some allocated goodwill. So we need to test it for impairment annually, which means at the same time every year, and whenever there is an indication that the unit may be impaired. So now, what should be taken into account when assessing the indication of impairment? So firstly, let us look into the external sources of any potential indication of the impairment. First, during the financial period, the value of an asset and the market value of an asset has significantly declined more than what would be expected. For example, let's say that you bought an asset and you paid for it as much as 1 million ringgit. Suddenly, it's only worth 500 ringgit. So such market decline and the market value of an asset will be subject to impairment. Second, the significant changes with an adverse effect have taken place during the period or will take place in the near future of time. For example, in the technological market, the economic condition, or the legal changes that may affect the environment of where your entity operates. And thirdly, the market interest rate or the other market rate of return on investment have increased during the period, and such increase will affect the discount rate being used in calculating the value in use of an asset. In other words, it will affect the cash flows of your business. And finally, the carrying amount of net asset of the entity is higher than the market capitalization, which this is only applicable to those companies whose their shares is being publicly traded in Bursa Saham, for example. So on the other hand, there are also some internal sources which indicate the impairment of assets. First, the obsolescence or physical of an asset. Next, the significant changes with an adverse effect on the entity. But in the aspect of internal sources, it is happening or coming from the inside of an organization, which means that it is internally generated from the organization. So, for example, the company might want to restructuring or discontinuing some operation of the business. And lastly, the evidence is available from internal reporting that indicates the economic performance of an asset is or will be worse than what would be expected. So, whenever there is an indication mentioned in the previous slides, testing means comparing the carrying amount of CGU and Goodwill with the recoverable amount of CGU. But how do we figure out the amount for these two? So for carrying amount, it is an amount at which the asset is recognized after deducting the accumulated depreciation or amortization and accumulated impairment loss. Meanwhile, for the recoverable amount, it is the higher value between the fair value less cost to sell and value in use. So if the carrying amount is greater than the recoverable amount, then the differences between these two will indicate that there is an impairment loss. In such a case, how do we allocate this impairment loss? To answer this question, I will pass the presentation to the next presenter, Amalia.
Assalamualaikum and hi everyone. Thank you Iza for the presentation. Now I will continue the presentation by explaining to you guys about the impairment loss for a cash generating unit. But before I start my presentation, allow me to introduce myself. My name is Nur Amalia Aisha, metric number 199185. Okay, let's continue with the presentation. Okay, as for my part, I will be explaining to you guys about the impairment loss for a CGU, which is cash generating unit. And I will also provide you guys with some example to make sure that you have a better understanding regarding this part. Okay, so impairment loss for a cash generating unit is basically being explained in MFRS 136, particularly in paragraph 104 and also paragraph 105. So as for paragraph 104, it mentions that the impairment loss shall be recognized for a cash generating unit if and only if the recoverable amount of that unit is lesser than the carrying amount of the unit. And the impairment loss shall be allocated to reduce the carrying amount of the assets of the unit in the order of first, to reduce the carrying amount of any goodwill allocated to the CGU, and next, to the other asset of the unit pro rata on the basis of the carrying amount of each asset in the unit. So continue with for the next paragraph, which is paragraph 105. So it states here that in allocating an impairment loss in accordance with paragraph 104 just now, an entity shall not reduce the carrying amount of an asset below the highest of its fair value less cost of disposal, its value in use, as well as zero. So the amount of the impairment loss that will otherwise have been allocated pro rata to the other asset of the unit. So now it might be confusing as for now, but I'm sure that you will have a better understanding once you take a look at the example. Okay, so this is the example for the impairment loss for a cash generating unit. So let me read it out for you. Mummy Corporation purchased 100% shares in Baby Limited for 200,000 when Baby's net assets were 185,000. Baby operates in 3 geographical areas, which is Allen, Bland, and Clan. So as for the division Allen, the net assets is 70,000, and for Bland, net assets of 50,000, and for Clan, net assets of 80,000. So based on the synergies expected from the business combination, Mummy allocated the goodwill of 15,000 as follows, which is Allen 6,000, Bland 4,000, and Clan 5,000. So the goodwill of 15,000 is actually from the purchase of 100% shares in Baby Limited, which is 200,000, minus with Baby's net asset of 185,000. So we will be getting 15,000 as for the goodwill. And then Mummy decided to allocate 6,000 out of the 15,000 to Allen, 4,000 to Bland, and 5,000 to Clan. And at the end of 2021, an independent valuator estimated Clan's market value to 67,000, and management projected Clan's value in use to 65,000. The cost of disposal related to Clan would be negligible. Okay? And at the end of 2021, Clan's asset included in their carrying amount buildings, equipment, as well as other assets. 50,000 for a building, 15,000 for equipment, and 6,000 for other assets. The question required is to calculate the impairment loss of Clan. Okay, only for Clan. So this is the solution for the example. So actually, Allen, Bland, and Clan are all cash-generating units to which the goodwill was allocated. However, in this question, we will only focus on Clan. But Mummy needs to also test the goodwill allocated to Allen and Bland annually. Okay? So first, here we need to compare Clan's carrying amount including the allocated goodwill at the end of 2021. So this is the carrying amount, which is building 50,000, equipment 15,000, other assets 6,000, and we need to add all of this carrying amount together with the allocated goodwill, which is 5,000 for Clan. Okay? So we will be getting 76,000, which is the carrying amount together with the allocated goodwill for Clan. And then we need to compare that with Clan recoverable amount at the end of 2021. That is actually higher of Clan market value of 67,000 or value in use of 65,000. So here we can see that for the recoverable amount at the end of 2021, we need to choose the higher of market value or value in use. So we can see that for Clan, 67,000 is higher than 65,000, and the 67,000 is actually the market value of Clan. Okay. So by comparing these two, by comparing the carrying amount together with the allocated goodwill as well as the recoverable amount, we will be getting impairment loss of 9,000, which is 67,000 minus with 76,000. So since Mummy allocates 5,000 goodwill to Clan, so the goodwill is being reduced to 0, and the remaining of 4,000, the remaining loss of 4,000, we need to allocate on a pro rata basis. Okay? As you can see here, this is the allocated impairment loss for each of the assets just now, which is building, equipment, and also other assets. So since the total impairment loss, the total balance of impairment loss after we have deducted the goodwill is 4,000. So we need to allocate this 4,000 to each of the assets. So, okay, I will take building as example. Since the carrying amount of building is 50,000, we need to divide this 50,000 with the total carrying amount of all assets, which is 71,000, and then we multiply it with the balance of impairment loss, which is 4,000. So we will be getting 2,850. We will be getting 2,817 for the allocated impairment loss for the asset of building, And then by doing the same calculation, you will be getting 845 for equipment, 338 for other assets. So the allocated impairment loss will equal to 4,000, which is the balance of impairment loss after deduct the goodwill. So if the question asks for journal entry, this is how it's going to look like. Debit profit or loss, impairment of asset, which is about the impairment loss just now, which is 9,000. And then we will credit goodwill, 5,000. Credit buildings, 2,817. Credit equipment, 845. And then credit other assets, 335. Just to make sure that you need to allocate the impairment loss to the individual assets. So actually you are crediting some specific building or a piece of machinery. So I hope by now you are clear about impairment loss for a cash generating unit. I will pass the presentation to the next presenter. Thank you.
Now I'm going to present on the reversal of impairment analysis. Similarly, when assessing an impairment loss, an entity is required to assess at the end of each reporting period whether there is an indication of impairment loss that is recognized in prior period should be reversed or partially reversed. Therefore, firstly, we need to identify whether there is any indication that impairment loss is no longer exists by looking at these two sources, which is external sources and internal sources. In external sources, we may identify through the increase in market value or significant changes in market, technology, legal, and economic aspect, or decrease in interest rate. On the other hand, if we look at the internal sources, we may want to look at whether there is significant changes in the structure of the organization, which includes restructuring or enhancements. Or we may observe the internal reporting evidence to look at whether there is an impairment loss that is no longer exists. Next, the reversal of impairment loss must result only when changes in estimates to determine the asset's recoverable amount. In other words, an entity cannot simply identify or indicate an amount for the reversal of impairment loss due to the unwinding of the discount or the accumulating depreciation of that particular asset. Nevertheless, in IAS 36 of allocation and reversal of impairment loss of goodwill cannot be reversed. In addition, the reversal cannot result in carrying amount bigger than the original carrying amount after the regular depreciation. Now I'm going to pass the floor to the next presenter, Alia Nur Zahira.
Thank you, Munira, for the introduction just now. Okay, so my name is Alia Nur Zahira binti Muhammad Zahiri. My metric number is 197852. Today, I'm going to continue what Munira just explained just now about the reversal on impairment, but I will be focusing on CGU. CGU is cash generating unit. Okay, under MFRS 136, paragraph 122, it explains that the reversal on impairment loss for CGU should be allocated to the asset of the unit, except for goodwill, pro rata, proportionally with the carrying amount of those assets. So this increment in the carrying amount should be treated as the reversal of impairment loss for individual assets and recognized in accordance with paragraph 119. So what is paragraph 119? What does it explain? Paragraph 119 explains about the reversal of impairment loss for an asset other than goodwill, which should be recognized immediately in the profit or loss statement. So unless the asset is carried at the reversal amount in accordance with another MFRS, for example, MFRS 116 PPA, the reversion model. So any reversal of an impairment loss of a reverted asset should be treated as the reversion increase according to the other MFRS. Then continue to the next paragraph, which is explaining about reversing an impairment loss for CGU, paragraph 1 to 3 and the same MFRS 136. This paragraph explains that allocating a reversal of impairment loss for CGU according to the paragraph before 122 the carrying amount of an asset should not be increased above the lower of first its recoverable amount if it is determinable. Second, the carrying amount that would have been determined had no impairment loss being recognized for the assets in prior periods. In short, the amount of the reversal of the impairment loss that would otherwise have been allocated to the asset shall be allocated pro rata proportionally to the other asset of the unit except for goodwill. So I'm going to pass the floor to the next presenter, Nur Shaza Adira.
Thank you, Alia. Assalamualaikum and hi, my name is Nur Shaza Atira. My metric number is 196354. So I will be continuing the presentation with talking about the operating segment. First, based on the MFRS 8, paragraph 1, it stated that the core principle of operating segment is an entity shall disclose information to enable users of its financial statement to evaluate the nature and financial effects of the business activities in which it engages and the economic environments in which it operates. The key concept is that the entity should provide information used by management that would allow users of the financial statement to understand the entity's main activities, where those activities are located, and how well those activities are performing. Next, who needs to apply the MFRS 8? It stated that it needs to be applied by separate or individual financial statement and consolidated financial statement whose the debt or equity instrument are traded in the public market. It can be a domestic or foreign stock exchange or an over-the-counter market. Or who is seeking to issue any class of instrument in the public market. It means that it applies to the financial statement of any entity for both separate or consolidated financial statement that files or is in the process of filing its financial statement with a Securities Commission or other regulatory organization for the purpose of issuing any class of instrument in the public market. 10. We're looking at which segment that need to be reported or need to be ignored. In MFRS 8, it stated that under the reportable segment paragraph 11, each operating segment need to be reported separately by an entity by following these two criteria. The first one is each segment that has been identified as a segment. It means that it meets the definition of a segment or results from aggregating two or more segments based on the aggregation criteria. So, two or more operating segments can be aggregated into a single operating segment if aggregation is consistent with the core principle that I have mentioned earlier, or if segments have similar economic characteristics, and if the segments are similar in each of the following respects: the nature of products or services, the nature of production processes, the type or class of customer for their products or services, the methods used to distribute their products or services, and if applicable, the nature of regulatory environment, such as banking or public utilities. And then, the second criteria is each operating segment that exceeds any of the quantitative thresholds. It means that an entity shall report separately information about an operating segment that meets any of the following quantitative thresholds. First, the segment's reported revenue, including both sales to external customers and inter-segment sales or transfers, is 10% or more of the combined revenue, internal and external, of all operating segments. Or the absolute amount of the segment's reported profit or loss is 10% or more of the greater of, first, the combined reported profit of all operating segments that did not report a loss, and the combined reported loss of all operating segments that reported a loss. And for the absolute amount, it means that it doesn't take any plus and minus for an amount into account. And then the third quantitative threshold, its assets are 10% or more of the combined assets of all operating segments. But if the operating segments that do not meet any of the quantitative threshold, it still can be considered reportable and separately disclosed if the management believes that information about the segment would be useful for the financial statement users. And then it also stated that in MFRS 8, paragraph 15, if the total external revenue reported by the operating segments constitute less than 75% of total entity revenue, then additional reportable segments need to be identified and reported on until at least the 75% level is reached. Other than that, information about other business activities and operating segments that are not reportable because they do not meet any criteria stated shall be combined and disclosed in an all other segments category and need to be described. And for the next slide, it is about why the company provide operating segment. Firstly, it can give information to the users of financial statements about financial results and position of the most important operating units of a company, which they can use it as the basis for decision related to the company. Also, it helps users of the financial statement to better understand on the performance of the company, to better assess the risks and returns of the company, to make more informed judgments about the company as a whole, and to make clearer decisions about their investments. Next, I will pass the presentation to the next presenter, Nurul Izzati.
Hi, my name is Nurul Izzati binti Ibrahim and my matric number is 197848. I'll continue to present about the disclosure of operating segments. So once entity have identified the operating segments and determined which segments are reportable, the entity have to make an appropriate disclosure for each segment. So disclosure of operating segments can be categorized into 4 categories. The first one is general information. The second one is the information about profit or loss, assets and liabilities. The third one is reconciliation, and the fourth one is entity-wide disclosure. So the first category is about the general information. An entity shall disclose firstly factors used to identify reportable segments, especially regarding the basis of the organization, and judgments made by the organizations in applying aggregation criteria, and lastly, types of products and services from each reportable segment that generate revenues. The second type of disclosure is regarding the information about profit or loss, assets, and liabilities. This disclosure is considered the most important because it portrays numbers to the user. Entities are required to report a measure of profit or loss and total assets for each reportable segment. Both should be based on the information provided to the chief operating decision maker. And if the chief operating decision maker is regularly provided with information on liabilities for each operating segment, then these liabilities should also be reported on a segment basis. Whereas it specifies disclosures that are needed regarding profit or loss and assets where the amounts are included in the measure of profit or loss and total assets. For example, revenues, both internal and external, interest revenues and interest expense, depreciation and amortization, and it is also important to note that material items of income and expense are disclosed separately. Next, share of profit after tax and carrying value of investment in entities accounted for under the equity method. And lastly, material non-cash items other than depreciation and amortization. At the same time, it is also important for the respective entity to provide an explanation regarding the measurement basis used. The measurement basis for each item separately reported should be the one used in the information provided to the chief operating decision maker. For example, basis of accounting for transactions between reportable segments, nature of differences between measurements of reportable segments, assets and entities assets, nature of differences between measurements of reportable segments liabilities and entities liabilities, nature of any changes from prior periods in the measurement methods to determine segments profit or loss and their effect, and lastly, nature and effect of asymmetrical allocations to reportable segments. That's all from me. I pass the floor to Alia Nur Zahira.
Thank you, Izati. Okay, so it's me again, Aliana Zahira. I'm going to continue what Izati explained about what to disclose in the operating segment. So the third category of the disclosure in operating segment is reconciliation. Reconciliation is actually an explanation of the relation between individual numbers per segment to the total. At least we need to reconcile total of reportable segments revenue to entities revenue, total of reportable segment profit or loss to entities profit or loss before and after tax and discontinued operation, total of reportable segment asset to the entities asset, total of reportable segment liability to the entities liability, and lastly, total of reportable segment amount for every other material item of information disclosed to the corresponding amount for the entity. So all of this, we need to reconcile the revenues, profit or loss, asset, liability, and every other material items of information with corresponding amount. So in conclusion, all of this amount is material enough to be reconciled with entities on amount. Then the fourth categories of operating segment disclosure is entity-wide disclosure. Entity-wide disclosures is not a segment level, but entity level for all segments. Here we have three subcategories. Okay, for your information, the three subcategories is actually considered product and services, geographical areas, and major customers. Okay, first, information about product and services at here. You need to report the revenue from the external customers for each product and service or group of service. Eventually, if this is not available and if it costs you to produce these information, then you can skip them. Then you should present the information about geographical areas. If this is not readily available and the cost to produce this information is excessive, and you can skip disclosures also. You should present the information about the revenue from external customers based on geographical locations and non-current assets that are certain based on geographical locations. Finally, you should present information about major customers and especially whether the entity is rely on the major customers. So if the revenue from the transaction with a single customer amount to 10% or more of the entity's revenue, then this needs to be disclosed by showing the total amount of the related statement. Okay, so this is the example of the operating segment in financial statement. So this is the financial statement extract from the financial statements of Nestle company. As you can see here, this is the reportable statement. Okay, this is the revenue part, the sales part, and this is the profit or loss part. So I think that's all for our presentation. Okay, in conclusion, for the first topic, Okay, from the view of business owner, goodwill is important if the business wants to ensure that they are not undervaluing any aspect of their business, and CGU is important in determining the cash flows associated with individual asset for an impairment analysis. And then operating segment is will be much appreciated by both investors and shareholders as they get to evaluate the risk and return associated from the investment and help them in making best decisions for the future. That's all from our group. Thank you.